The top business stories live from the Sky News City studio. The UK economy flatlines as the Chancellor warns that high inflation is the main obstacle to growth. £6 million of a potential payoff over the Nigel Farage debanking row. Plus, shares of Diageo fall by more than 15% as the global drinks giant warns of a slowdown in sales growth. Good morning, this is Business Live with me, Ian King. The UK economy flatlined during the third quarter of the year, according to figures published this morning. The Office for National Statistics said that month-on-month the economy grew by 0.2% in September. That meant that for the July, August and September quarter there was no growth, compared with the 0.2% expansion seen during the 3 months to the end of June and the 0.3% growth during the first 3 months of the year. The figures are, however, slightly better than the 0.1 contraction that the City had expected to see during the third quarter. And they mean that, contrary to expectations at the beginning of the year, the UK is likely to have avoided a recession in 2023, unlike a number of other European economies, including Germany and the Netherlands.
To shrink by more than 1% in the first part of this year, actually it's grown. So I think the bigger picture is that this is a much more resilient economy than many people predicted. Of course, when the Bank of England are rightly keeping interest rates higher in order to bring down inflation, our number one priority, growth. But in the end, if we get inflation down, that is the best possible way to secure long-term growth, and that is our plan. I can rule out any tax cut that is going to fuel inflation when we are making such good progress against inflation. In the long run, though, what I would say is we do want to bring down the tax burden. There are no shortcuts. We've got to be smarter about the way we spend taxpayers' money. We've got to reform the welfare system. Those are difficult, long-term decisions to make.
Well, joining me now for more on this is Gerard Lyons, Chief Economic Strategist at NetWealth. Gerard, great to see you.
Was very much in line with what I expected and in line with what other economic indicators are showing. The key story here is that as the Chancellor today shows that the economy is now moving from resilience to being very sluggish indeed. If you break down the figures, the positive was maybe that the services sector, which is the bulk of the economy, is still keeping its head above water, growing 0.2, and there was pockets of strength like professional financial services were very strong in August and September. So that's good. At the other extreme, consumer-facing parts of the economy, as captured in today's data, were again weak, very weak in August, down again in September. And that mirrors what we've seen from the retail sales figures, which is that in the last 3 months, retail sales are down 0.8%. So coming back to your question, the economy is sluggish, still avoiding recession. There are pockets of strength, but the key message for me is that the economy is losing momentum, and that's a challenge as we move into next year.
Yeah, we're looking at a chart. That's the chart now for what we've had so far over the last 12 months. I mean, consensus for the final 3 months of the year is that we'll get growth of around 0.3%. What do you make of that?
Yeah, well, it might be right. I think it's more likely to be 0.1 or so. The positive as we move into the last few months of this year is that inflation will be decelerating and wage growth suggests that people will have the ability to spend. But as we've seen from the recent monthly figures, consumer-facing indicators, as I've mentioned, haven't really kept strength. So people are cautious. I think the real story is that in terms of monetary policy and interest rates, that takes a long time to fully and we've had aggressive monetary policy tightening to keep inflation in check. But the Bank of England, having kept rates too low for too long, has, in my view, gone to the other extreme and tightened too much. And the real challenge is that when we look at some of the indicators, purchasing managers' indicators suggest the economy is in recession. It's very tough. So that would suggest to me or imply to me that monetary policy tightening will really start to hit this economy hard as we move into next year.
That's pretty terrifying, given, as you say, the Bank of England's only just hit the pause button on raising rates.
Well, I feel they should have paused some months ago. I feel that even though rates have to remain much higher in the future than in the past, it would not surprise me that if we move into next year, that the expectation will move very quickly to one of interest rate cuts. Rates are currently 5.25%. I think they should have stopped at 4.5%. I would say by the end of next year, the second half of next year, the economy will be seeing interest rate cuts. Of course, we also have the autumn statement in 2 weeks' time, so the Chancellor has the ability also, from a fiscal side, in terms of government spending and taxation, to try and give the economy a helping hand.
Realistically, though, what can the Chancellor do in the autumn statement to promote growth?
OK, well, it depends on how much fiscal space he has, and that's out of his hands. On the positive, in the first 6 months of this year, the fiscal numbers have been £20 billion better than expected last March in the budget. Pounds better than expected. Inflation's causing havoc. It's squeezing spending of government departments, but it's also giving a boost to tax revenues as people are brought into higher tax brackets, etc., so-called fiscal drag. So that suggests £40 billion, but the key unknown is what does the OBR, the independent forecaster, think of the economy? Back in March, they thought the economy would be in recession this year. They're up that because the economy this year will probably grow 0.1%, 0.2%. Next year, the OBR thought the economy would grow 1.8%. I don't think they'll be saying that. There's a danger of recession next year. So the point is that even though the fiscal numbers are running positively for the Chancellor, the OBR will probably say you don't have that much room. What should the Chancellor do? Any fiscal measures need to be timely and targeted. Anything to help the supply side of the economy. Too many people always call for tax cuts. Therefore, people tend to turn off and think, oh, everyone's always saying that. But actually, in economic terms, this is one of the times when tax cuts are actually higher on the agenda. But I think the Chancellor targeted, helping the supply side. If demand does remain weak in the rest of this year, then he might be thinking out. Time the Chancellor needs to take any room he has to try and give the economy a helping hand.
All right, Gerard, we have to leave it there. Great to see you, sir. Dame Alison Rose is to lose £7.6 million of her potential payoff following the so-called debanking row sparked by the closure of Nigel Farage's Coutts accounts. NatWest said in a statement to the London Stock Exchange today that Dame Alison would receive around £3 summer after admitting she had discussed the former UKIP leader's banking arrangements with a BBC journalist. Well, joining me now is our city editor, Mark Kleiman, who broke this story, of course, last night. Mark, I mean, it's quite surprising, given the way that the board had defended her, to come on as strong as they have in some ways.
Well, it is in some ways, Ian, but I think that's a reflection of bias to Howard Davis had come under in recent months. Also, the pressure it had come under very publicly from Nigel Farage. Ian, given that it's taken months to get to this point, you would have expected the bank to be a little more transparent, particularly because actually that only tells part of the story in terms of the money she will receive. She's also already received about £650,000 share award, which predates her time as chief executive of NatWest, which is probably going to be worth in the region of £800,000 that award vests. So in total, that payoff is, as you referred to in the introduction, worth £3.2 million. That figure does not appear in NatWest's statement, and I think there's a bit of consternation in the city this morning that NatWest hasn't been a bit more transparent, fully open about the size of the payoff that she is receiving.
Interesting stuff. Thanks, Mark. Some other business news stories for you now. And shares of Diageo have fallen by more than 15% this morning after the global drinks giant warned that it expects a slowdown in both sales and profits growth in the first half of its include Guinness, Johnnie Walker Scotch Whisky, Gordon's Gin and Don Julio Tequila, highlighted a materially weaker performance outlook for Latin America and the Caribbean, which accounts for around 11% of its total sales. It said this partly reflected tough comparisons with the first half of the last financial year, during which sales in Latin America and the Caribbean grew by 20%. Morgan Rum said it had momentum growing in all other parts of the world, with Africa in particular doing well. The breakdown in housing chains as it warned that profits for the year will be at the lower end of its forecast range. The UK's seventh largest house builder by stock market value said that following the usual summer slowdown, the housing market had remained subdued during the autumn. It said that during the 18 weeks to last Friday, average selling prices had been 2.5% lower than in the year on year. The shares have fallen by 6% this morning. China's government is dealing with a ransomware attack that disrupted the market in US Treasury bonds. The Industrial and Commercial Bank of China was prevented from settling trades in US Treasuries on behalf of market participants. Well, China's foreign ministry said this its emergency response. It said the attack had been limited in impact and almost resolved. Lockbit, which is a criminal gang with ties to Russia, is said to have been behind the attack, but this has not been confirmed. That even its high-rolling customers were being affected by the cost of living crisis. The company, whose luxury brands include Cartier, Montblanc and Chloé, said that sales had continued to grow during the 3 months to the end of September, but that the growth of 5% it saw during the period was slower than the 19% sales growth it enjoyed during the 3 months to the end of June. Well, Harples and Dunhill reported a profit of €1.51 billion for the period. That was lower than the €2.17 billion forecast. The shares have fallen by 5.5% in Zurich. Well, I've been speaking to CNBC correspondent
from the luxury player Richemont were below expectations. So when you look, the sales in Q2 were up 5% there, so that was below expectations. That was very much driven by a poorer performance in the watches sector. Okay, they have Cartier and Van Cleef & Arpels, and there it was in line with expectation, up 9%. But certainly looking at the different so certainly we see the European consumer maybe tightening their belt a little bit. Of course, the cost of living crisis, inflation. You know, the Chinese consumer is extremely important for the luxury sector. There the sales were up 8%, but that's still lower than we thought from the results at Richemont were a little bit below expectations.
What's interesting, though, is that this isn't a Richemont-specific problem because, as you say, the likes of LVMH have also been reporting weaker sales growth of late.
No, absolutely. And what's really interesting, it's really impacting the different luxury players differently. So we saw the big luxury giant LVMH also like Hermès that reported the numbers last week. They're doing very well. So we see it's very much at the entry level of luxury, the aspirational consumer that seems to be tightening their belt. And we saw, again, that players like Kering, that internal issues of the reboot of that brand in particular. But all these brands said that the entry level is the one that is being impacted.
Europe is quite weak for them. China has moderated. What about the US?
Well, the US also, there's a word of caution from there, from all the luxury groups that we've heard here. For Richemont this morning, the sales were up just 4%. So we see that there's a bit of a wait and see when it comes to the US economy. They say there could be a bit of a rebound, but certainly they're waiting to see the second quarter for here. It is the aspirational consumer, the one that we're waiting to see whether they start spending a little bit again, whether there's maybe a little bit more certainty going forward, or whether they still try to watch how they spend their money.
And what has Richemont said today about the outlook? Where do they go from here?
Again, a lot of caution that we have from Richemont. They say they wait and see. September, they had their AGM where they said there's a word of caution. It sent their shares lower already in September. They're hoping for a soft landing in general for economies in the US and in Europe, but certainly they sent a word of caution.
This Friday morning, don't go away.
That has happened within minutes, and now it's coming from both sides, and it's moving this way.
Only about half a mile from the Turkish coast, and it's evident that the boat seriously overcrowded. This is one of the... I'm Alex Crawford, and I'm Sky's special correspondent based in Istanbul.
This is going to be the biggest party Tripoli has ever seen.
That's it, it got us there. Still. We aim to be the best and the most trusted place in news. And very frail. Look at her arms. I can put my entire hand round.
Absolutely savage.
The world's largest falls now down to a trickle in places.
Close and personal with her owner.
This is what makes the job so fantastic.
I just took a shower above the clouds. You know why? Because this is the
Well, the pound has drifted a little on the foreign exchange markets following the latest GDP figures this morning. Here's the current picture. Sterling off by around a sixth of 1% or so against paused for breath last night on the back of a hawkish speech by the US Federal Reserve Chair Jay Powell, during which he played down hopes that US interest rates have peaked. Stocks fell overnight in the Asia-Pacific region. All of the main indices finished, followed this morning by declines for most European stock indices. Here's a picture on continental Europe. All of the main indices currently fallen following today's statement from Richemont that we were discussing before the break with Charlotte Reid. Hermes is off to airing by 4.25%. All of those Paris listed, of course. Here in London, the FTSE 100 also going into the weekend on a one of the FTSE's biggest stocks. Well, that alone has clipped some 33 points from the index, doing a lot of damage there. Analysts chew over its numbers from earlier in the week. The specialist cosmetics group, Warpaint London, is up by nearly 6% following a trading update. On the commodity markets, well, the oil prices continue to claw back. It still looks set to finish lower for a third consecutive week. Barrel of Brent crude will currently set you back $80.84 a barrel. That's up a little over 1% on the session. Well, joining me now is Sophie Lund-Yates, lead equity analyst. See you this morning. We should start with Diageo because I think this is the biggest one-day fall that this stock has had since.
It's been long favoured as a bit of a FTSE darling, really, you know, a kind of a favoured steady Eddie stock. Strong brands, but unfortunately, that macro environment in Latin America and the Caribbean means that they, you know, the shares are off close to 15%, which is, as you point out, an absolutely enormous move. But what I would we were mentioning some of them earlier. Still massively exists. You know, they've put through price increases of over 7% and volumes are holding relatively steady. That, to me, is still a company with a great deal of resilience, but certainly a great deal to monitor from here.
Yeah, absolutely. And a very popular stock, I imagine, with a lot of your clients.
Yes, so obviously Diageo falls into that camp, as I say, of having a lot of kind of compounding potential because of that steady Eddie nature of its business model. So certainly
the speech that Jay Powell made last night, I mean, it sparked a sell-off on Wall Street for the first time in more than a week, and obviously in Asia Pacific overnight. What precisely did he say that upset people so much?
Yes, so the interest rate increases over in the US are still on the table, whereas the markets had begun to price in this notion that the US was done with raising interest rates. And now that we're seeing that, we're not going to hesitate to raise interest rates again if that's what we need to do to vanquish inflation once and for all, has really spooked this idea that we're on a kind of a hands-off approach to monetary policy over in the States. And that, unfortunately, is now being called into question.
What did you make of the impact on potential
nation? The fact that the UK has just about swerved a recession means that the economy is potentially still unlikely, still And the problem with that, of course, is that interest rates are likely going to need to move forwards in order to properly stamp out that heavier fists to deal with it. And certainly, you know, on one count, it's absolutely great for the economy.
Overnight that caught your eye as well.
Yes, absolutely. So Huawei's biggest chip maker has reported an 80% drop in profits. And the reason this matters is because it tells us a great deal about the electronics consumer landscape. So there's a big inventory buildup happening, they say, partly because of a lack of demand for smartphones, and then also those geopolitical tensions as well, which aren't helping. Now, there's kind of two different types. Festive trading season is potentially going to be a bit rockier than the market was first pricing in, and that obviously has huge read across.
Leave it there. Good to see you as ever today. Thank you. That's it from me for the time being. I'm off to gargle a bit of this afternoon when my guests will include Philip Jansen, the Chief Executive of BT Group. Do join me for that. He's always worth listening.